Hey, hello everyone. It is the 15th of December. Welcome to today's market recap. I'm Chris with Elliott Cafe. So let's take a look. Last time I left you, it was on Thursday. I think I've done the last video, and back then the markets were, very shaky up at the top, and we've had quite a bit of weepy action. On Friday, we basically turned back lower and closed to the lows, and then today we just were able to rally a little bit, especially kind of overnight in the futures, and then kind of throughout the day we just lost all of that and closed again near the low. So the markets continue to be very weak here. On Thursday last week I've said that I've reduced my hedges, but then on Friday, obviously with the action that we had, I was forced to kind of get back into protecting some of the longs that I have, and trying to force the downside again. Now, this is not a set thing that we're going to crash in any way, but the market is acting fairly weak in here, and it continues to be rejected from any rallies. So this is very interesting. Actually, and we're going to take a look here at the wave counts, but actually the Qs have now closed below their 50-day moving average, and they're the weakest of the bunch. If you watch the ratio between the S&P and the Qs, you'll see that it's in favor of the S&P 500 for now. As the growth trade continues to sell off and deteriorate. So I think it's still a time to be defensive. The wave count, it's kind of starting to work out, the idea of that B wave. I mean, crypto is very weak once again, and we'll take a look at that here, what happens to the counts. But the fact that we closed here in the NASDAQ composite below that 50-day suggests extreme caution now. And again, we failed from the previous swing high, so this could very simple be an X wave, and we can get into that kind of larger ABC. Now we finally starting to get a little bit of weakness into the small caps, which were the ones that kind of outperformed the market, and it's kind of tough to trust the rally when the small caps are rallying. I think we've talked a little bit about it, just because the kind of the larger, the healthiest part of the market is not pulling its weight. And yes, you can argue that there is breadth participation when you have, let's say, something like RSP, equal weight, small caps, maybe mid caps trying to rally. But it's not only that; it was also a lot of the kind of the higher beta name that kind of were rallying, and there was a big divergence between some of the healthiest part of the market and some of the junkiest, I should say, part of the market. And when that happens, you see that those smaller quality stocks have, I think, less chance to be right into kind of projecting the future path of the larger market. So long story short, if the IWM loses the breakout and turns back, which it seems to be doing in here, then again, that reinforces the idea of a further kind of defensive stance on the market. So I want to be really careful in here. In a month that's supposed to be sort of outstanding in a way, and we're supposed to have some kind of a rally maybe later on, who knows. But for right now, this is a weak behaving market. We're taking a look at Bitcoin, which is being rejected from just below that 50-day moving average. It's breaking a little bit of an uptrend, and remember, we talked about the possibility of maybe a leading diagonal from the lows, but with the equity market acting the way it is, I would be very surprised if, that this would be a leading diagonal. Now, I have to brush that off my head and just say, well, just stick to the pattern and let's give it a chance to work out. What runs against this thought? Well, you're in a downtrend on the daily time frames, on the weekly time frames. Below key moving averages in here, you're trending kind of lower, you're breaking a little bit of an uptrend in here. So a leading diagonal type of a trade, it's a little bit of a it's a little bit of a hope, if or a little bit of a how should I say, it's just kind of going against the grain of the market at the moment, which is kind of how everything starts when everything reverses. But anyway, bottom line is if we are to be in such a situation, as hard to believe it is at the moment that we could be, this 83 zone in here, 83K, has to kind of hold. Now, it's not going to be invalid until you're actually breaking below 80 or 80,500, but I would not want to lose the swing low, because if we do, I think we're going to go lower. So, we'll see what happens this year. Again, just because we see something, it doesn't mean that we have to action on it. It's just giving us an idea of what could happen. And if it does happen, and if it does end up being a diagonal in here, then we will see it in the market, because the market will react and it will turn and break back above this kind of a 20-day moving average. It will go above 90,000 and eventually will get back above 94. And once it does, that would be a good confirmation that we're maybe beginning a larger impulsive move higher. So that's my thought. I'm observing something, but I'm not putting my stake in the ground and say it's got to be a diagonal. We're going to have to rally from here or else, because that's how people lose a lot of money. So I'm watching it. I'm kind of content with the price action here. I know that if it's a fourth wave, we're going lower. And that's kind of shown into this wave count. Remember, we're watching a possibility of a top in the wave 1 with the wave A unfolding, and we watch as this was developing higher and it was struggling to break. It went above 30.2, then 50%, but never really managed to stage a further advance, and now it's kind of turning. And this 83 or 84K, it's important, and if we lose this, then we're probably beginning a larger or a possible final decline in a wave 5. But it's only final if the market reacts from there, right? I'm not gonna say that's the end of the move and then we're gonna bounce in a fourth wave, because first of all, this corrective move in here, it's a bit too large for my liking. It's not, and when I say it's too large, I'm thinking, what if it's a wave 2 instead of a wave 4? And that's why, if it's a wave 2, then it really could unleash a wave of selling down. But let's take it one step at a time. Bottom line, the market is telling us to be cautious, and and it told us in its rally, in this rally in here, being rejected, and we kind of thought about this kind of fourth wave idea, and if we go back to this idea in here, I mean, and you look at the weekly time frame, and you can see, I mean, look at the way these candles are, just really weak, and not able to get back above. They're basically all inside bars, nothing too powerful. So what I usually do when I'm kind of scanning for something from the lows, or maybe if there is some kind of a leading from here, then I watch the fib next, and I go on a retracement. Right, and we're gonna put that up there and see how this looks. All right, so we are at the 61.8 of this entire rally. So if ideally for the wave 2, or even for a B wave, this is kind of where you want to hold. Now you do have, again, just the other defense right here at this corner, 83.8200, and I want to see a bounce from here. Below these levels, it's gonna be interesting, because if we lose the 78.6 retracement of this move, you move into the extension lower, and that's about a $75,000 target, 75,700, more or less. It's gonna be in that area. So this is where I'm at with with Bitcoin, and with the S&P. Here is the B wave, and the idea that this could have been already a wave 1 top, and the fact that we failed here and we continue to fail, it just reinforces the fact that this could be a B wave. Sure, some of you might say, well, Chris, listen, this was kind of taken, and even though we didn't continue, what if this is just wave one of this larger wave five, and you can have a wave two, and then you go? Sure, a lot of things start like that, and that's what usually kind of creates those copper handles. What I will be watching is a fib between this low and this high, and see if we're going to hold that fib, which is into the 61.8 once again. And that comes in at about 66, which means there is still further decline unless we're holding 38.2, but we'll see. So, however, it's hard to be bullish here unless you're breaking above 6,900 with conviction and with volume and with a lot of the healthy stocks, or the the stocks that have good earnings and their sales and all of that, projections, and if some of those stocks turn, and who's the market going to be carried by? I mean, and I know people talk about this rotation from growth maybe to value, and maybe things moving to financials, and maybe some, I don't even know if energy is the one that's doing, but maybe, I don't know, maybe materials, maybe staples, or retail. I mean, I saw stuff like Victoria's Secret, and there were some other stocks in clothing that were kind of breaking in pretty good moves to the upside. But I don't know if those are the stocks that can carry us forward. Anyhow, the market it's weak. So and what's interesting is that why does it respond like this when we already had a rate cut? Maybe it was already priced in, and then we also had some sort of a monetary easing, more or less. They don't want to call it quantitative easing, but so it's tricky up here. I'm going to continue to kind of play defensive and just kind of watch these levels and try to act accordingly, and hopefully not screw it up, not screw up my hedges, and be able to kind of get out in time, so I can let my long positions turn and benefit. But I'm still staying with shorts in here and trying to protect myself. So we'll see what happens. But listen, it's been a pretty decent year overall in terms of the market performance. Less crypto, but we'll see. Or I'll talk to you tomorrow. It's enough for the day. But again, you can find me on Twitter. You can find me on Substack, and obviously on YouTube, and yeah, I think I said on Discord. All right. So talk to you soon. Bye bye.